How's it going, everybody? Welcome back to the channel. Welcome to the channel. What is up? So, have you ever wondered how many stocks you should own? It's a question that I think everyone experiences at least once in their life. How many stocks should you own? Should you own 1, 2, 10, 100, 1,000? Somewhere in between? I don't know. I mean, I have my opinions, but Marketwatch believes they have the answer. This is an investing website, mostly business-related news, stuff like that. And they came out with an article saying they know the number of stocks you should have to beat the market. After all, who cares about having X number of stocks as long as you beat the market? That is the most important thing after all, right? You want to make money. The name of the game is to make and maintain capital, all right? So let's dive into this article, and then I'll give you my takes and what I believe is, say, the perfect number of stocks and everything, and we'll go over what they talk about in the article. But before we do that, always remember to be a good neighbor and like this video, subscribe, and turn on that bell notification to stay notified on all the latest and greatest videos that I post. So anyways, let's get into this video. So it says, want to beat the market? Here's the exact number of stocks you should own. Diversify. Newbie investors have been harmed with that bit of advice since man first rubbed two sticks together, as this cartoon clearly demonstrates. Oh yes, it does. It shows two cavemen people, and they got the Moogs investments happening, and it says, you need to diversify your portfolio. Put half into hunting and half into gathering. Ha! How funny. But is there such a thing as too much diversification? Yes. In fact, there absolutely is, according to Phil Fisher, an influential stock picker whom Warren Buffett credits as a major source of inspiration. Investors have been so oversold on diversification, Fisher said many decades ago, that fear of having too many eggs in one basket has caused them to put far too little into companies they thoroughly know and far too much in others which they know nothing about. Sheen Standard Stockton, president and chief investment officer of Ensemble Capital, agrees, saying that while diversification is critical in mitigating risk, active market participants should be mindful of just how much diversify is ideal. Too much of anything can be bad for you, and diversification can be taken too far, he wrote in a post on the Intrinsic Investing blog. But the level at which too far kicks in is surprising to most people. That number, of course, depends on what an investor is trying to achieve. Standard Stockton used this chart, based on data discussed in the book A Random Walk Down Wall Street by Burton Malkiel, to illustrate the ideal number of stocks to own for these looking to beat the market. So here we have a chart that says benefits of diversification decay quickly. Diversification, total portfolio risk as a function of number of stocks held %, and then standard deviation of returns. So as you can see, it goes up to 35% with the graph starting at 30% returns, and then the number of stocks goes from 0 to 100. They also have two marks on here at 10 stocks and about 17.5 of total portfolio risk, and 15% return with 10 stocks. And then as you can see, right, they have this other bar there that from 2025, which is when diversification starts to kind of level off. So as you can see, once 25 stocks are owned, active investors pretty much capture all the benefits of diversification. That's assuming the stocks in the portfolios are selected randomly. Obviously, 25 tech stocks isn't going to cut it. For active investors, there's a huge cost to adding new names to a portfolio, Standard Stockton explained, and there is a huge advantage to be gained by prudently limiting your portfolio to the companies that you thoroughly know. He said what active investors should really avoid is something in the middle of the range between 25 stocks and complete diversification, which should be owning the entire S&P 500 universe. Owning 150 stocks or 350 stocks dramatically dilutes any ability you might have to beat the market, he said, without adding much in the way of diversification because you already captured most of the benefits with your first 25 stocks. Okay, so that's what that article pretty much goes over. Now I'm just going to mention a few quotes here from Warren Buffett, and that's about it. One of the quotes he has here is, diversification is protection against ignorance. It makes little sense if you know what you are doing. Another quote he says is, wide diversification is only required when investors do not understand what they are doing. Now, those are some words by a very smart man, all right? And what I'm going to say is that 25 stocks is, in my opinion, a little bit much in a portfolio. I think you should only invest in what you know and what you believe, okay? You're not going to know about every single company. It's not possible. And if you do know about every single company, you're only going to know like bare minimum amounts. You're not going to know everything, okay? Like, you're just not, all right? You don't need to. It's kind of putting, in a way, useless information into your brain. You don't really need to know it. You need to know the stocks you're invested in, all right? Every other thing is chatter. Now, you can add positions, you can get rid of positions, but in my personal opinion, if you're investing, you have to decide how you want to allocate your portfolio. Do you want to be a dividend investor? Do you want to be a growth investor? Do you want to go speculative? What do you want to do with your portfolio? It's a very good question and something that you need to answer yourself before you can 100% determine how many stocks you need in a portfolio. I personally believe you should diversify a bit, but not a lot. I think you should be covered in certain sectors, all right? But you don't have to be covered in every sector, in my personal opinion, because there are so many, all right? I mean, you got tech, you got transportation, you got retail, you got food. I mean, you have so many companies. You got the social media people. You got a company like Disney that's like a consumer entertainment business where they got like movies, TV shows, and even more stuff. They're like a media giant, right? They got the theme parks, everything like that. So there are so many companies that do a wide variety of things. You don't need to own all of them, because if you own every single stock, you're going to have the winners and you're going to have the losers. And honestly, you probably don't have that much money to invest in all these companies, all right? I mean, if you want to do that, literally just buy the S&P 500, which isn't a bad idea, all right? So I would suggest, if you're going to diversify, try and pick the cream of the crop, all right? The best stocks in whatever sector you want to pick. If you want to pick tech, find the best tech companies, whatever you believe they are, okay? Whatever you believe they are. Pick them, okay? And follow them. Don't pick all of them. Just pick one or two that you believe in. Now, another thing Warren Buffett says is you don't have to swing on every single shot, all right? He mentioned it to playing baseball, is that you only have to swing when it's in your sweet spot. So your little sweet spot there, the spot where you're best, that's your sweet spot. That's where you want to hit. Now, not every stock's going to be in your sweet spot, and that's okay. Because no one's yelling at you, swing, 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 come on, you bum, swing. No one's saying that. You got all the time in the world to hit a home run. So don't rush it. Just wait for your shot and then take it, all right? So in my personal opinion, I don't like to have more than, say, 15 to 20 stocks in my portfolio. I like to manage it under 20, that's for sure. 25 I think is a little much, just because I like to stay on top of all the stocks I own. And if I do invest in them, I like to invest in them long term, so I don't want to trade them too often. So when I buy them, I just kind of leave them in my portfolio. But I prefer to add to the stocks I like, all right? I like to buy a stock, and if it goes down, then I buy it if I still believe in it. If I don't believe in it, well then maybe I'm not going to buy anymore, and maybe I'm going to wait for a rebound and sell it, or maybe I'm going to start to trim the position. Something like that, okay? So just, whatever you do, you don't have to 100% diversify. I wouldn't say go obviously all heavy in a couple sectors, but pick the stocks you believe in. If you believe in 2 companies in tech, if you believe in 1 company in healthcare, if you believe in 3 companies in transport, whatever, it doesn't matter. If you believe in 3, 4 video game companies, maybe you don't have to pick all of them. Maybe you can pick half of them that you believe in. If you like 6, maybe pick 2 or 3 type thing, right? Don't pick all of them. Pick the one that, like, if all of them disappeared and you could only have one, which one would you pick type thing? So don't go crazy with diversification. It's good and everything, but 25 stocks is a lot of stocks to own in my personal opinion. Try and keep it a little smaller than that, but That's just my opinion on it. Anyways, let me know what you thought of this video. How many stocks do you personally own in your portfolio? That would be pretty cool. In my personal portfolio right now, I believe I have 14 stocks. Anyways, hopefully you enjoyed this video. If you did, I'd like to see you next time. And always remember to hit that like and subscribe button. Greatly appreciate it. And if you do, then I'll definitely see you next time. And comment down below. That would be super sick. Anyways, I'll see you next time. Remember to have an amazing, beautiful, awesome, one-of-a-kind day. And I'll see you next time.